All right, let's get straight to it. The US markets are currently closed, and we've just had the big show, AMD's earnings report. As of the official market close yesterday, Tuesday, November 4th, 2025, AMD stock, ticker AMD, finished the day at $250.11. That was a rough session, down about 3.67%, with the entire semiconductor space feeling some pressure. But that closing price is already old news. The real story, the one that's setting the entire tone for today's pre-market, happened just after the bell. AMD reported its third quarter results, and in after-hours action, the stock immediately slipped, fluctuating but trending down around 3% to 4%. So what on earth is going on? The company reported a massive beat on revenue, bringing in $9.2 billion when Wall Street was only looking for $8.74 billion. They also beat on profit, delivering $1.20 per share against a $1.16 estimate. To top it off, their guidance for the next quarter was also a beat, forecasting $9.6 billion at the midpoint, well above the $9.15 billion consensus. So let me ask you this. How does a company beat on earnings, beat on profits, and guide higher for the next quarter, and the stock drops? This is the exact moment where expectation smashes into reality, and it's where most retail investors get completely foot-wronged. The immediate surface-level expectation was that AMD, which has been on an absolute tear this year, would simply report good numbers and the stock would continue its climb toward $300. You probably saw that sentiment all over investing sites and social media. But the reality is that for a stock that has more than doubled in 2025, a simple beat is not enough. The market, the big funds, the institutional players, they were looking for absolute, undeniable perfection. And they found one tiny little thread to pull on: gross margins. While AMD's revenue and profit guidance was strong, its forecast for adjusted gross margin came in at 54.5%. That's a very healthy number, but it was only in line with expectations. It wasn't a massive beat. And in this current market, where Nvidia stock has been posting astronomical margins in the 70% range, in line is being treated as a disappointment. This is the new reality for AMD. It's no longer the scrappy underdog. It's now a titan, and it's being judged like one. This is a classic sell the news event, amplified by the incredible run-up we've seen. Think about it. The stock ran from the low 100s to over $260. Traders using everything from a basic Robinhood app to a complex interactive broker setup were buying in anticipation of this AI-fueled growth. Self-investing accounts have piled into this name. The expectation was that the MI300 AI accelerators would instantly translate to Nvidia-level profits. The reality is that building that business, scaling it, and capturing that margin takes time. AMD is doing it, but the market is impatient. Yesterday's trading session saw over 56 million shares change hands, and you can be sure the after-hours and today's pre-market volume are just as heavy. This isn't a fundamental breakdown, it's a high-stakes repricing based on incredibly high expectations. The big Fidelity Wealth Management desks and Schwab Intelligent Portfolios are probably looking at this as noise. But for active traders using a Fidelity trading platform or the SoFi trading platform, this short-term volatility is everything. They're looking at this dip and asking if it's the beginning of a real correction or just the last chance to get on board before the next leg up. Let's look closer at what's actually happening under the hood, because the earnings report itself was, frankly, outstanding. The data center segment remains the key driver, but what really surprised many was the other parts of the business. The client segment, that's your Ryzen CPUs for desktops and laptops, saw revenue pop 46% year over year to $2.8 billion. That is a huge number and shows they are continuing to take share and benefit from a PC market that is finally showing signs of life. Even more stunning was the gaming segment. Think Radeon GPUs and the semi-custom chips for consoles, which was up an incredible 181% year over year to $1.3 billion. So while the entire market is fixated on AI, AMD's core businesses are also firing on all cylinders. This isn't a one-trick pony. This isn't just a story about AI. It's a story about broad-based technological execution. The core of the bull case, the investment thesis for AMD, is that it's a diversified powerhouse. But let's be real, the long-term story is about AI, and the press release was absolutely packed with announcements that should, in a sane world, have sent the stock soaring. AMD announced a strategic partnership with OpenAI. They're working with Oracle to offer the first publicly available AI supercluster powered by AMD's new Helios rack design. They're expanding collaborations with Cisco, IBM, Cohere, Vultr, and DigitalOcean. This isn't just talk. These are massive cloud and enterprise players committing to AMD's hardware. This is the proof that the MI300, MI350, and future MI450 chips are the real deal. They are building the only viable alternative to Nvidia stock at scale. The expectation is that Nvidia has an unbreakable monopoly with its CUDA software. The reality is that these massive companies are desperate for a second source, and AMD is the only one there to provide it. This is why analysts at major banks have been tripping over themselves to raise price targets to $300 and $310. They are looking at these deals and modeling out billions, potentially tens of billions, in new revenue over the next few years. They are not trading the 54.5% margin guide for next quarter. They are investing in the 2026 and 2027 revenue stream. This creates a fascinating split. You have short-term traders and algorithms selling off because a single metric wasn't perfect. Then you have long-term investors, the people building positions in a Fidelity brokerage account or an individual brokerage account, looking at this as a gift. Many people doing online investing are seeing this dip and are likely considering it. This is where investment help is crucial, understanding the difference between a short-term price movement and a long-term shift in fundamentals. The fundamentals here, evidenced by the customer wins, just got stronger. The price just got weaker. That's a divergence smart investors look for. So, here's the real question, and I want you to comment below. Is this post-earnings drop a huge buying opportunity? Or is the market right to be worried about AMD's margins against Nvidia stock? Let me know what you're doing. Are you buying, selling, or holding? For a bit of context, Advanced Micro Devices is a semiconductor company that designs high-performance computing, graphics, and visualization technologies. For years, it was the distant second-place player to Intel in CPUs and to Nvidia stock in GPUs. But under the leadership of Dr. Lisa Su, the company engineered one of the greatest corporate turnarounds in tech history. They pivoted to a chiplet design, which allowed them to produce more powerful and more efficient chips at a lower cost. This led to their EPYC processors for servers absolutely dominating Intel, taking massive market share. On the consumer side, their Ryzen processors did the same in the PC market. This is what built the foundation. The Xilinx acquisition a few years ago brought in adaptive computing technology, which is now being integrated into their AI accelerators. So when you buy AMD, you're not just buying a CPU company or a GPU company. You're buying an integrated high-performance computing company that can bundle CPUs, GPUs, and adaptive silicon, FPGAs, into a single package, which is exactly what the AI data center needs. This is their unique advantage. Something that even Apple stock with its custom silicon or Tesla stock with its Dojo chip can't easily replicate for the broad market. Looking ahead, the future outlook is now entirely about this tension. The expectation was a smooth upward ride. The reality is that the stock is now in a show-me state. The market has priced in tens of billions in AI revenue. Now, AMD has to deliver it and also show that it can be high-margin revenue. The biggest risk isn't that the technology fails. The tech is clearly working, or OpenAI and Oracle wouldn't be signing on. The risk is twofold: execution and competition. Can AMD manufacture and deliver these incredibly complex chips at the massive scale required without delays? And two, how hard will Nvidia stock fight back? Nvidia isn't standing still. Their next-generation chips are always around the corner,